The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen. My name is John Needham. I'll be your host for this evening. And thank you very much for being with us for this Danielcode webinar. And it's grand to see so many of the old faces, the people we know that regularly come along to these webinars and are so supportive of what we're doing. So let's start at the beginning. Today, I set up this webinar, as you know, on Sunday. But I thought that the words violence and momentum and equilibrium would very well likely apply for today. And as we're going to see very soon, they certainly have. So how is the volume, folks? Would one of you please type in the question box? Let me know that you can hear me all right. Well, I can't hear. Here we are. Good, wonderful, perfectly. Oh, Mark, of course, we can't have a tutorial without a webinar rather without Mark L, a wonderful supporter of ours, and grand to have you with us. Well, we've got Chanel with us today from Bangkok via Canberra. Now has seen the light, got sanity, is now living in the Sunshine State. That's Queensland. On the northeast side of Australia, the great continent. Glad to have you with us, Chanel. I hope you're feeling so much better. Gabe's with us from California. Justin, of course, from the beautiful Hunter Valley in Sydney, where the grass is so green you could eat it yourself. That's where all our big horse studs are down there. It's a bit like Keeneland. Lovely place. Kevin, we haven't seen you for a long time. Kevin, glad to have you with us. Kevin's a very determined trader, pretty good at it. Mark's with us. Peter's with us. Many Peters are with us. And look at this. Goodness me. Thank you, Mark, of course. Michael. And we haven't seen you for a long time, Michael. Michael's a guy who's done a tutorial. He's a wonderful man, and he's always full of interesting things. He lives in, I think, southern Turkey, but occasionally goes and lives in other parts of the world. Always interesting. He's a yachty. He's a sailor, so he's one of my mob. Great having you with us, Michael. We should have a talk soon. Let me know when you're ready. And we'll bring you up to date on all the new stuff. Plenty of new stuff today, folks, too. So wonderful to have everyone with us here. Okay. Kevin, thank you. He does watch the videos. He's got an internet problem. Peter Mack, who's not a day trader. Pietro, he's in a beautiful part of the world. He vacillates between Europe and some of the southern islands in Indonesia, as I recall. Very nice. Rob H. from the land of the long white clouds with us, as is Slav, who's a determined analyst of charts. Toddy from Southern California, grand to have you with us, Toddy, of course, and Vicky. And we don't have many ladies, so we always like to give them a special welcome, and thank you for being with us, Vicky. Okay, so what a wonderful day today's trading has been. And I imagine you all did terribly, terribly well. And if you didn't, just keep an eye on the Danielcode, because we seem to be continuing to pick all these markets at the right time. So, folks, as you know, markets are rational, orderly, and sometimes predictable, and that's, of course, how we create the signals for you. So, if you're new to Danielcode, I'm going to ask you to give me 20 minutes of your time, and I will change your life. And that's actually not an original expression. Mark L., who's with us today, who did a Danielcode tutorial some time ago, was kind enough to say, John Needham and the Danielcode have changed my life. And the 20 minutes I would like you to give me, if you would, is go to the website, www.thedanielcode.com, and on the landing page you'll see 4 separate video links. The first one is from Mark L., who's with us today, The second one is from Amy from Boulder, Colorado. Never seen a trading chart in her life until she did the tutorial. Now a very successful trader. And videos 3 and 4 are both from Justin, who's with us today. And honestly, do yourself a favor and just take the time to go through all of these videos, or any of them you can start with, but they're really worthwhile. And in video number 4, done by Justin, he's been a long time member of the Danielcode, as is his father Hank, wonderful man. Say hello to Hank for me, Jay, if you would. Justin's just a back-testing machine. He has just done so much work, and kindly is happy to share that with the rest of you. So it's a wonderful gift, and of course he's come up with something new for us today, which is extraordinary, because it's not quite what I expected. Anyway, do give me that 20 minutes and I'll change your life. This is what the link on the website looks like. It's headed Teach Yourself to Trade, the video series. This is a new product that we've developed, which is that will teach you how to trade, or teach yourself to trade. These are a series of videos. They're about an hour long, most of them, some a bit more, some a bit less, and it takes you through the establishment of the Danielcode, what it is, where it comes from, all the math that is behind it. The next one teaches you how to trade price, very important. The next one gives you all sorts of insights into some of the weird things markets can do and how to handle it. And finally, lesson 4 teaches you how to create and trade Danielcode time signals, which is the big deal. These gentlemen who you'll hear and on the videos talking about 400% on margin, 600% on margin, and more. That's what they're using, Danielcode, trading Danielcode time signals. Those are those videos. Do have a look. Click on the link, Teach Yourself to Trade, and there's a document inside there that will give you all sorts of insights into what we're doing. So this is, folks, our trade program for today. This is part of the Danielcode website, and what it does, it displays the signals for trades that we have today, and it carries forward trades that were active yesterday, but are still available to be elected, or you would say filled. I say elected today. And you can see that we've got a nice sell on the Euro-Japanese yen pair there, and I think a couple of others. The GBP yen trade was pretty nice. You're going to see that in a moment. And you can see that we've got a sell signal for the NASDAQ, a sell signal for the Russell, a sell signal for the S&P, a sell signal for gold. And it tells you in this trade program of ours what the signal is, exactly where to put your entry order, and exactly where to put your initial stop. It then gives you some other information, whether these are correlated trades or otherwise, which is important because some of these markets are so highly correlated that a signal in any one of them can be elected or filled, if you like, or executed, probably a better word, in any other. In other words, the equities, Russell, Dow, S&P, NASDAQ, and Germany's DAX, are so highly correlated that a signal in one can be executed in any other. So you saw you had a sell in the Russell today. You could have executed that in the Dow if you'd wanted to, or the DAX. In fact, the DAX signal was yesterday, and it was elected there. You'll see that trade as we move along. So now that you've got an idea of what the signals were for today, let's have a look what happened. This is the British pound Japanese yen pair. It had a sell signal 2 days ago, remember, all of these Danielcode trade signals have different periods of validity. The TO3 signals, we expect them to be elected or filled within 2 days, including the day of posting. The blue line trades, we expect them to be filled within 3 days, including the day of posting. And the TO3 plus signals, we expect them to be filled on the day of posting, but I've said to you on a number of occasions, write them down, because sometimes they'll come a day or two early, and it's very, very worthwhile to track those. Wonderful trading. So we had a number of good trades in Forex today. Very interesting. Happy to see that happening. We look further on here. This was the S&P today. This was a nice trade. This was, you can see I put a note on there, lows 57.47. Well, it was when I looked at it at 3 o'clock this afternoon, which was 5 o'clock in the morning our time. But a nice TO3 sell signal straight into that trade. Pretty simple, $4,400 in there, and this is the first hint of violence we've seen on the downside of this market for well over 6 weeks. This is a bar that is multiple times open to close, multiple times the average length of the latest trading bars we've been seeing. There is just a hint of violence about this bar. And violence is wonderful. It's a precursor to great things happening. And interestingly, with the Danielcode, when we get violence and big bars and volatility, it gets more accurate. Normally, what happens with most programs or trading systems, the big bars just run straight through everything. These don't. In fact, it just gets more accurate. And you can see what this market did. It actually went down to the little red line, the next level there, and closed a couple of points off that. So here was the NASDAQ. Same sort of thing. It came off for a higher high. Not as much violence really in the NASDAQ, and this was all pretty much triggered by some very good reports from the FANG markets, the really big tech companies, but everyone's long already. The whole world's been long sitting in this trade, so there wasn't a much upside reaction to it, and of course that's what happened. We got a little down bar in the NASDAQ today, but a nice enough trade for $8,000 plus a bit. This is the Russell, which has been out of sync with the other markets in a considerable way. And you can see we've had some nice trades up and down. We had a correlated TO3 buy to take us into the high. What do I mean by a correlated trade? Well, we had a buy signal in the S&P or the NASDAQ, or in the Russell. It didn't have it in the Russell. It was in the S&P or the NASDAQ, or might even have been Germany's DAX. And they're so highly correlated that a signal in any one of them can be executed in any of the other correlated markets, which is what I did there. And it ran into the high for about $3,000. We had a short trade, $2,200 down. Little rally back up on our TO3 buy signal. It was struggling, but it sort of forced its way up, and we got a new sell signal for today, and it popped another 1,800 in to add to the can. This was gold. You'll notice when we looked at our trade program, we had a sell signal in gold today. Only 2,400. It ran down, looked a bit exciting, and then rallied back up. Now, there's a fair bit of seasonality in these trades. Thursday, as I've told you on a number of occasions, is the most bullish day is the most bearish day, I should say, for the equity markets. Friday is the most bullish day. So it'll be interesting to see in the equities whether we get any sort of continuation of that sell signal that we had today, or whether the market's just going to do a little bit of a rally. Very important point right here. I mean, the obvious thing is this market is hugely, hugely overbought. How much further can it go? Well, it'll go until it doesn't want to. Trying to guess when minor trends will end is pretty difficult. They say knowing things is hard, and knowing the future and important is very hard. This was the correlated trade in silver. We had a TO3 sell signal right at the top. It went down 3 bars and then did a 1 bar rally up on a TO3 plus signal, which is not here. It was on that little inside bar 3 bars ago. And of course, because that was a TO3 plus buy, it also set up a flip me sell below the low of that setup bar. But as well as that, because we had a sell signal for gold today, gold and silver are so highly correlated directionally that a signal for either of them can be executed in any other. And this was, we took the gold sell signal, and this was what the correlated sell signal in silver looked like. So you've had a great chance to fill your pockets. It's all been great stuff, and it continues right here. This is crude oil, and you can see where I show you the TO3 sell signal. The very next bar, you can see there's a green stripe sitting in there. That's because this market gapped down. It gapped way past the entry point, and then found support right at the 67.11 blue line, which set up a TO3 buy signal for yesterday, which continued today. Nice $2,100 trade up in that market. This is natural gas, which had exactly the same sell signal at the high. As you can see, it was a TO3 sell signal. Been a good trading market, hasn't it? 2,000 down, 1,200 up, another 2,600 or thereabouts today. So what's interesting is that you can see from its TO3 sell signal, it gapped down and it left a gap. Now, markets generally hate gaps. They'll try to fill the gap, and that's exactly what you've seen crude oil doing in the previous chart. This market's actually extended further down, and it's given us a couple of very, very nice trades straight off our standard TO3 buy, TO3 sell signals. You can subscribe to those signals. They're not expensive. And you can use the trade program to see exactly where to put your entry, where to put your initial stop loss. And if you want to know more about markets than that, you'll find all about that in our Danielcode tutorials or in our new Danielcode video series, which we call Teach Yourself to Trade, or TTT. And that's a wonderful tool that's been welcomed by a lot of you who are anxious to learn more about trading, enhance their trading skills, take themselves up to the top level. And they do so on the video series. All about that's on the website. This is beans. We had a TO3 sell signal that gave us 3 bars down, was nice. Straight into that blue line, you can see at 979, correct zero. The close was just about exactly that. Close enough for government business, as they say. And that set up our TO3 buy signal, got elected on the outside bar, and we're still long that market. And it was perilously close to the flip me sell signal, which I post for you on the website. You can see that under one of the gold tabs. This is Germany's DAX. I don't do the members charts for Germany's DAX anymore, but we do create the signals, and you can see it's been a very, very good trading market. We had a nice run up to enter that where I've marked the TO3 sell signal 1 bar past the high, and that was the inside bar. We had 2 days down, not much money in that. 4-day rally, and then straight into a TO3 plus sell signal, and that's sitting at about 9,300 into today's close. There is a mini contract for the DAX now, Germany's DAX, and you can trade that on the CME if you want to. So, momentum and equilibrium. I wrote an article for you some weeks ago, and it's called Once Upon a Time in Trading Land, and it's available at the website under its own banner on the homepage, which we'll come to in a moment. But basically, markets have 2 states in which they exist. They can be in states of momentum and states of equilibrium. Unfortunately for most traders, equilibrium happens about 3 or 4 times as often as momentum. When the market's in equilibrium, it's balanced or resting, and it'll move from that to momentum. It's in momentum where we get our beloved trend trades that go on for days and days and days, give you a lot of money. It's quite wonderful. But at equilibrium, markets are testing the support and resistance levels constantly, and you often get little bars up that go nowhere, little bars down that go nowhere. In other words, it's a form of consolidation. The extreme consolidation is what we call consolidation, but equilibrium is another form of consolidation. It might have a direction. It could have a constantly sideways to up movement or sideways to down movement, but it's not going anywhere very fast. It's in equilibrium. But being able to trade both trending markets and counter trends are a big part of trading. And there are various techniques for avoiding trading the counter trends, but they're blunt tools until now. I found something I'm going to talk to you about a little further, but that technique of trying to stand aside from counter trend trades is quite haphazard. It's also costly to your trading, because at the time you put the orders on, say, for example, this is Monday night at 6:30 US time. You've just got your data. If you're lucky, it'll come soon anyway from Trade Navigator, and you're going to put your orders on. When you order, let's say the trend has been down and you've got a buy order. If you're going to put on a buy order in a downtrend, by definition, that is a counter trend. And we expect that the market will behave differently in a counter trend to how it will trade when it's moving with the trend. So these new momentum and equilibrium studies that I've been doing, I'm now teaching that as part of the Beyond Masterclass tutorial. And basically we can now identify the setup bars that herald a trend move. And there's only 2 of them. And they seem to be almost infallible. But remember, nothing in the Danielcode speaks to quantum. So we can get a trend setup bar, and the market can then rally for a few days and then continue taking its trend momentum as it goes. However, these trend setup bars are at the absolute extreme of the momentum envelope. What I mean by that is, think of an elasticized envelope around the bars on your chart. And that elasticized envelope, the top of it can be pushed up much further than you think, and the bottom of it can be pushed down much further than you think. But it will hold, and it will then go back to its tighter shape. What happens when that is broken is often violence. It often takes some violence to break that pattern. Markets, once they're in a state of equilibrium, love it. They're happy. They want to stay there forever. They're warm and cuddly, and they don't want to get out of it into the big bad world of momentum. But often you'll see that violence is required to make that move. And we got just the merest hint of that today. It's not an extreme move, but in the S&P, rather than the other indices, there was just a hint of violence. It'll be interesting to see what happens with that tonight. But think about this, because it's terribly important. It may be one of the most important things we've ever done. If we can now identify the setup bars that herald a trend move, it follows logically that we can also identify the non-trend moves. In other words, we can identify the equilibrium moves and the counter-trend moves. And some of those, the equilibrium is so intense that we're in what we call a consolidation. And in a consolidation, your buys fail and your sells fail on daily bars as we trade. So this concept of being able to identify the bars that set up the start of a momentum move, which may either be with that signal or against that signal, what it's doing is flashing a great big light at it, saying, now's a really good time to be trading. Now's a good time to be trading, folks. Now, for those of you who are trading the Danielcode, time signals, you'll already be in that market already. This is not as fast as the Danielcode time signals. Nothing is. It takes a little more time, a few more days, 1 or 2 more days to develop. But the minute we can put our hand on our heart and say, this has given us the setup bars for a trending move, it will either do a little rally and keep going in the direction of that setup bar, or it might rally back and keep rallying back and give you a signal that that has been the end of that down move. Its market is now going to rally up through the highs. Knowing that is like winning the lottery. If you want to, once we taught you how to identify these particular patterns, you can be very, very cautious. You can actually just stand aside entirely when you see the market moving without that Danielcode trend setup bar, 1 or 2 or 3 of them, as the case might be. So we can now identify the setup bars that herald a trend move, and we can also identify when the market is in a non-trending state or a state of equilibrium. And it seems to me it's almost entirely foolproof. Markets can't go into their trending patterns without giving one of these signals, and there are only 2 of them, and we can now identify what they are. So that's not only extraordinary, that's absolutely momentous, absolutely momentous. So equilibrium is where markets want to stay for longer, and for traders, equilibrium is horrid. Your buys fail, your sells fail. Small non-momentum bars, both up and down, can play havoc with your P&L. And we have techniques to deal with trading apparent counter trends. What happens is that bars that appear to be a counter trend at the time we are placing our orders, they can turn out to be new directional bars that mark an important turning point and the start of a new trend. In other words, we can't just sit back and say we're not going to trade counter trends. They're more difficult, granted. They're more dangerous if you don't know what you're doing, but everything is. But if you understand how to trade them, they're your friend, because enough of them actually become the start of a new directional move. And that's important. So we don't want to waste the start of a new trend move. So trading apparent counter trends is a vital part of our total trading strategy. And I've always looked at counter trends as a losing strategy. And the Danielcode strategy, those of you who've done a Danielcode time trading tutorial, either with me or through the Teach Yourself to Trade video series, you will understand that the techniques we have for counter trends were basically designed by me to mitigate the losses. I've always looked at the counter trends as a losing strategy. Excuse me. And I've developed strategies to mitigate those losses. Well, it turns out that, like a lot of other things in markets, I'm wrong. And Justin's going to show you why as we move along shortly. But here you can see in this S&P chart here, we've got this short trade. But this is what I call the first hint of violence. This bar's closed right down near its low. It's been a big bar, open to close multiple times of the last reasonable period of time that we look back at. And this is the first hint of violence. And it often takes violence to move the market from a state of equilibrium to its state of momentum. And that's hopefully what we're starting to see here. So a couple of things to think about. First of all, just the state trading object. You had your TO3 sell signal, valid for 2 days. Trade got elected today, down it went, nice $4,400 trade. That's point 1. What it does from here on is point 2, and what it does on Friday, which is the most bullish day of the market seasonally, we will see, and it'll be telling us a great deal. So Now, Mr. Justin is with us today, and Justin's a wonderful, wonderful young man, and he's been a Danielcode member for years and years and years. And he did a tutorial with me way back when I was doing them on Waiheke Island. And if you've ever been interested in paradise and you'd like to know what it looks like and smells like and feels like, go to Auckland, New Zealand, get on a ferry to Waiheke Island, and you'll find you're pretty well there. It is the most wonderful place, and I did a number of live tutorials there. They were very, very good. So we think of counter trends as a losing proposition, and we think of our counter trend trading strategy, as I've said, as a loss mitigating measure. In fact, what Justin's done is he's taken 16 markets that he's been trading recently and for which he has intraday data, and he has subjected them to some very, very extreme backtesting. And the Danielcode strategy of using a trailing stop if a new trade appears to be a counter trend is in fact a net winner. And we have the amazing Justin with his father Hank, both long-term Danielcode members. We have Justin to thank for this. So Justin is literally a backtesting machine. And this week he's turned his sights on backtesting and analyzing that Danielcode counter trend strategy. And we're immensely grateful to Justin, not just for this work, but for all the work he's done. You look at those videos 3 and 4 on the homepage. That's Justin's work, and it's a massive, massive body of work now. Sometime in the next early days of next week, I'm going to give Justin a free tutorial on Beyond Masterclass. In other words, I'm going to teach Justin the technique of finding the setups that make markets trend and finding what happens if you're trading without those setups. Justin, for today's presentation, had written to me, he said, I was originally a bit concerned that the real-life intraday behavior might change the outcomes of my paper trading a bit more than I'd like, but that doesn't appear to be the case at all, according to the sim trading data. Still great returns despite a mixed bag of trading opportunities, and honestly, trading's been not great the last month or so, has it? So this is what he's done. He's traded 16 future market, and he's used 2 of our strategies, a 50% 29 ATR. ATR stands for average true range, folks, and I use mainly a 29-day average true range. I don't want to get too close to the weeds. I don't want to be sitting on a 7-day ATR. That's far too fast in my view, because the ATR is essentially your risk on trading. Every entry you take, if you're buying a high and your protective stops at the low or vice versa, it's the range of that bar that's essentially your risk on that trade. And I prefer to take that over a period of time. I've used much shorter ATRs and I've used much longer ATRs. 29-day ATRs seem to me to be pretty good. And what Justin's done, he's taken the 50% of the 29-day average true range as a trailing stop. He's tested that. He's tested 62.5, which is the next number after 59. Remember the Danielcode numbers go 50, 59.3, 62.5. And he's tested all of those, and he's taken the 50% basis as nothing more than a control to see the effects of not having a trailing stop. So he's used that as a fixed 50% ATR, not the trailing stop, but a fixed 50% of the ATR. And it's fascinating. He said, generally speaking, the conditions of 16 markets during the time I traded them were a mix of sideways movement, outside bars, and some short trends. So there were plenty of counter trade to test, and you'll see this as we go through. So this is Justin's summary of what he's found here. He said the 50% trailing stop was the best performer but it only performed slightly better than having a fixed stop. Not a lot of difference. He has some conditions there. He talks about when the trailing stop performed better and when it performed worse. And what he says is that I've put these in gold. I've done that myself. That's not Justin. It says, due to the loss minimization built into the trailing stop, it usually had shallower drawdowns despite having more trades and a lower win rate. He then summarized at the end saying, despite the mixed trading conditions across the 16 markets, some were very sideways, and the lower than usual win rates that came as a result, the payout ratios were still comfortably in the same range that I had with paper trading, which was an average win of 1.5 to 2.5 times the size of an average loss. And this is the whole secret to the Danielcode. It's not that it has a very high win percent. It doesn't. And I've designed it to be optimized at the amount of dollars it makes. The Danielcode is optimized for making money, and that's all it's optimized for. I've always been scornful of people who think having a high win rate is a good thing, but as a good friend pointed out to me during the week, there are lots of people who just can't handle a loss. They just emotionally can't handle it, and they need to have a higher win rate. Well, let me tell you, the good news is I can give you a winning percentage of up to 92%. The problem is it doesn't trade very often because it's got so many rules, and it doesn't make a lot of money because it's so obvious. Danielcode, price trading or time trading, both absolutely wonderful. What Justin finishes up saying is the annualized return using the 50% ATR trailing stop in these conditions still came out at over 450%. And that's what with a 38% win rate and no compounding. So remember, we don't do any compounding. If you have to do compounding to make your program work, it's a 40 program. Your trading program, like the Danielcode trading programs, we should be tested on no compounding, and then if you want to do some compounding, it's up to you. But if it can't stand the test at zero compounding, it's no good. But have a look at this. The counter trends, we know that because they're counter trends by the sheer nature of what they are, we have a much, much lower win rate. But even down to a 38% win rate, it's still coming out at over 450% on margin. And that's with the 38% win rate and no compounding. And that was a surprise to me, folks. So I guess it's a surprise to you. Justin's then given us these wonderful summaries of performance. This one is 50% of the 29 ATR as a trailing stop when your trade is by definition a counter trend. In other words, if the market's in an uptrend and you're putting on a sell order, by definition, that's a counter trend for that trade. Now, that may change. You can very often find you'll put on a trade as a counter trend trade using your trailing stop, and then at the end of that day, you'll say, probable change of trend. So you will stop using that stop loss technique, and you'll go to the normal price or time stops, depending which program you're trading. So you can see here, this is 50%, 29-day average true range, trailing stop. It had total wins of 64,000, losses of 48,000. It still made a very handsome profit. And as Justin said here, the profit factor is 1.35. Return on IM is 38%. Amazing stuff, isn't it? You can just go through all of these. And I've given you the 3 modules he tested. This is the next one. This is 62.5% of the 29-day average true range used as a trailing stop in trades that appear to be a counter trend at the time the order is placed. Almost exactly the same thing, 65,000 in wins, 56,000 in losses, profit factor 1.16, very ordinary win percent, as we'd expect, because these, as we say, are only testing markets that when the order was placed were apparent counter trends, and this is part of the Danielcode technique for dealing with them. And here's the 50% of the 29 of the average true range as a fixed stop. And it's amazing, isn't it? The figures are so similar. They really are. So Justin said he took this test as a, what was the word he used, as the base, as a marker, just to compare as a comparison point for the trailing stops against the fixed stop. This is very good. In fact, it's better than some of the trailing stop technique we just looked at on the 62%. This was better. Very interesting. Marvelous, marvelous work, Justin, and I'm so thrilled. So I'm going to give Justin a tutorial. It'll be Tuesday afternoon, if that suits you, Justin, about 2 o'clock our time. I think you've moved to daylight saving now, so let me know if that's not going to be convenient. And I'm going to do the Beyond Masterclass, we call it. Our main Danielcode tutorial is called Masterclass. This next one is called Beyond Masterclass, which is all about momentum, equilibrium, and occasionally some very much treasured violence. So I'm going to do that tutorial with Justin this week, and I know that he'll rip into it with all his back testing, and it will be fascinating to see what comes out of that. And as I say, Justin's just so incredibly generous in sharing his work with us. It's just been an absolute boon. Okay, so Danielcode tutorial. If you want to change your life, that's what Mark L says. I've said it before, I'll say it again. The Danielcode and John Needham have changed my life. That's from Mark, a master trader. Also a comment here as well from Greg Palladini. He's one of our stalwarts and a huge supporter of Danielcode and done the tutorials. And Greg was also extremely generous. He said he came back to do his second tutorial to learn how to create and trade Danielcode time signals. His first tutorial, I wasn't teaching how to create and trade time signals. It was just on trading Danielcode price signals. And when he came back to do his second tutorial, he said, I'm going to post everything that happened so your members can see it. And he did. And if you go to a forum at the Danielcode website, look for a link that says Danielcode Trade Program or something like that, and you can see all of Greg's posts as he went through the tutorial on creating and trading Danielcode time signals. So that's the tutorial. I teach that myself. It's one-on-one. If you're interested, please shoot me an email and let me know, and I can send you some more documentation if you'd like it. And quite recently, very recently in fact, we started our new video series. It's called Teach Yourself to Trade. And that's a series at the moment of 4 videos that take you all the way from what is the Danielcode, where did it come from, how did it find life, and 2,500 years later, quite literally, take you from there through trading Danielcode price signals to trading Danielcode time signals, and all the weird and wonderful things that can happen to traders, and it's best you learn about those and have the knowledge of how to handle them before they bite you in the rear end while you're actually trading. So recently I wrote this article for you. It's called Once Upon a Time in Trading Land, and it's under this banner. It's on the home page. Just scroll down the home page until you see this banner and just click on that and you can read this article I've written. It's headed Once Upon a Time in Trading Land, and of course it's a fairy tale, but like all fairy tales, it has some elements of truth in it, and that particular truth is staggering because that truth is about momentum and about our ability to identify the patterns that will create long-term trends, which are the big winner. Get half a dozen of these into your P&L account and you won't know yourself, I promise you now. What's the proof of that? Well, this sheet that you can see here came out of the Danielcode webinar on October the 3rd this year. So you can go through YouTube and find that webinar. It was dated October the 3rd, and I threw this chart in just to give you a little bit of a teaser about what I was doing. And this is the US dollar index, and I put a circle around 3 bars and said medium trend change. In other words, this is the start, or could be the start, of a Danielcode trend movement. Have a look what happened. This is where we are now. That particular move came off the low of 99.88. Look at where it is now. This trade's worth about 3,300 per one contract. And the US dollar index is not a very big contract. You could have had 50 of these, or as many as you liked. But that was that straight, almost uninterrupted run. And what this is doing, this momentum studies are saying, when you see this particular pattern, it's very prudent to use a slightly relaxed stop. I'm not saying we're going to start taking on loads and loads of risk. That's never been my philosophy, but it is prudent. The probabilities are that you should be thinking about using a more relaxed stop, and you can create that for yourself, or you can talk to me about some different options. I think the 2-day stop is a problem. It's so well known. It's the most commonly used stop that people use, but traders use. So everyone knows about it. And as well as that, of course, it's become a target. So don't use that. I'll find you some much better alternatives and options. But I wanted to show you that I gave you this start of this argument on momentum trading back pretty much the day after it happened, and quite clear to see what happened from then on. So that is absolutely vital stuff. What is equally vital, and maybe even more vital, is what happens when you don't have a momentum signal. And I've headed this chart zero mom. Now that's nothing to do with mom or dad or pop or grandpa or any of them. It's just a shortcut for momentum. At points of zero momentum, we get the best trading conditions. It's quite clear that all of these momentum moves happen when we've got zero momentum, when the market is totally balanced. And that's when these zero momentum moves move. And we know what they are and we can identify them. So it follows, look at the turns that have got the pink shading on them. In these cases, the first 2 of them are bars that look like there's a decent rally in there, but you just can't find that profitable close. In the first one you can, but there's only one of them in about 12 trading days. In other words, horrible. If we can identify the bars that set up a momentum move, then we can also look at the rest of the bars and say there is no momentum move in this swing. And if we can do that, we can avoid a whole lot of this consolidated sideways difficult trading conditions. And that will make such a difference not only to your P&L, but to your state of mind. Here it is, just quite simply. There it is, that last rally up, that zero mom, the last little black triangle, diamond I should say, is right on that bar that I highlighted for you way back 3rd of October when I said this is the start of a excuse me, medium trend move. And as I say, 3,300 or thereabouts so far. So this is quite dynamic. As it moves along, it's telling us where it is all the time. It's an amazing thing. Okay, so there's a whole lot of information all at once, folk, and I hope you've enjoyed it. If you haven't already, please help yourself to a free trial from the Danielcode website. You just go to www.thedanielcode.com, click on the register button, and if you've already had a free trial in the past, the machine will remember you, and because it's mean, it won't want to give you another trial. In that case, just advise Terry, if you would, and he'll get it fixed up for you. And he's available at support@thedanielcode.com. And finally for today, this is our disclaimer, folks. Let me tell you, it's very easy to lose money trading futures and Forex if you don't know what you're doing. In fact, probably better than 90% of new traders lose their initial bank within 30 days. The literature says 90 days. I'll tell you it's a lot faster than that. The good news is that, on the other hand, once you know what you're doing, it's very easy to make large amounts of money by trading Danielcode preferably. Okay, so that's it for today. I hope you found this interesting, and I hope it's given you enough that it's going to keep you thinking about being able to identify momentum bars, being able to identify periods in the market where you can't find the momentum bars, meaning you can't find the setup bars that herald it. It's a wonderful thing, isn't it? These wonderful, wonderful moves. This is one of the most important things we've ever done. If we can now identify the setup bars that will lead to a sustained trend, and obviously the corollary to that is we can identify swings where there's no setup bar for a trend. In other words, it now has a much higher probability of being sideways. And it may look like it's got a bit of an up bias or a down bias, but it's not enough to be profitable trading. If you can get your head around those two concepts and think about them, run through this. Terry will post this again on the website and on YouTube tomorrow. Go through this again and really think about what that could mean to your trading. I have been tempted in my journey when I was really finding this concept of momentum and equilibrium, which, as I say, started probably over 25 years ago. I was tempted to say, when I finally had it all worked out, to say, this is the answer to everything. And of course it's not. What we do with this business is we are always dealing with probabilities. So there is never an answer to everything. However, I will say that knowledge of Danielcode trading and our new momentum and equilibrium indicators is as close to being the answer to everything as I have ever seen. So do think about it. I encourage you, get in touch with me if you'd like to learn more about it. We do have the teaching of that Beyond Danielcode as part of the Beyond Masterclass, I should say, tutorial. And this week, in the next few days, there'll be a new video under the Teach Yourself to Trade, which will be at a considerably cheaper price point, as that's the whole point of the TTT video series, and it will be on exactly that, identifying momentum and equilibrium patterns in markets. Okay, that's me for today, folks. Mark, amazing. That's interesting from Mark, because I said to Mark months and months ago now, what could make the Danielcode Masterclass trading better? And of course, Mark is the author of that first video. In many ways, he's the master, the father, if you like, of time trading at Danielcode. And as he said, it's perfect. He said it's the best in the world. You can't improve it. Well, I think we have. So thank you for that, Mark. And he says, Justin, to pass on to you his thanks. And I'm sure that's on behalf of members, because his work has been quite, and I can read that last word there. It says that, let's see what we've got here. Here we are. I'll move this around a little bit for you. It says your work, Justin. Mark says, has been an encouragement to him. That's wonderful. Okay, so from Kevin, I've just updated my 1-2 ATR yesterday from 20 to 18 on Russell. Got stopped out with only 78 ticks. So sad. You had a TO3 signal today. You could have just followed that down, Kevin. 1 to 2 80. I don't know what that means. Okay. Thank you for being with us, folks. Do write to me if there's anything in particular you'd like me to talk about, and I'll be happy to put that together for the next webinar. And thank you for all the people who've come in. Terry and lots of others have joined since I started, so that's particularly good to see. So that's it, folks, and I look forward to having your attendance the next time we do a webinar. Enjoy your weekend. You've still got Friday trading to go. I've put my orders on, so I'm pretty much finished for the week, but I'll look forward to talking to you anytime. Do email me, please, with any questions. jneedham@thedanielcode.com, jneedham@thedanielcode.com. And that's all. Thank you for being with us for now. Have a safe weekend. Bye-bye.